Global stock markets are rallying these days amid better-than-expected economic data from major economies and further signs of progress in the US-China trade talks. European stocks closed higher for a fourth session in a row, with the Pan-European Stoxx 600 index being up by almost 1%. Germany's DAX 30 was the biggest winner, rising 1.2% following data that showed the country's service industry leading growth in the Eurozone. Also, regional markets were supported by IHS market data, which showed that the Eurozone services sector had beaten predictions in March, with the Purchasing Managers Index rising to 53.3. U.S. stocks climbed in early trading on Wednesday after White House economic advisor Larry Kudlow said earlier that China and the United States expect to make more headway in trade talks this week. Besides, there were reports that the two countries were drawing closer to a deal. However, U.S. economic data kept gains on Wall Street in check. A gauge of the labor market showed private employers added fewer jobs than anticipated in March, while a separate report showed services sector activity slowed to a more than 1.5-year low, highlighting a loss of momentum in the economy. In particular, private sector employment increased by 129,000 jobs from February to March. The reading fell short of the market expectation of 170,000 and came in below the previous reading of 197,000, revised from 183,000. As such, March posted the slowest employment increase in 18 months. Against this backdrop, market expectations ahead of the Friday's key employment report deteriorated, and the greenback turned lower against major counterparts. Besides, the March Institute for Supply Management Non-Manufacturing Index, or services, fell to 56.1 from 59.1, which added to the bearish pressure on the dollar apart from risk-on sentiment. As a result, the euro recovered to 1.1250, where the pair struggled despite strong Eurozone data. The service sector activity in March rose at the strongest rate since last November, whereas goods producers recorded the greatest monthly fall in output since April of 2013. As for other news, Brexit remains in market focus. The latest talks between Theresa May and Jeremy Corbyn to break the Brexit deadlock have been called constructive. The two leaders met on a Wednesday afternoon and agreed to a program of work to try to find a way forward to put the MPs for a vote. Each party has appointed a negotiating team, which will have a full day of discussions on Thursday. Mr. Corbyn said that he raised a number of issues with Mrs. May, including future customs arrangements, trade agreements, and the option of giving the public the final say over the deal in another referendum. Amid rising expectations of a soft Brexit, the GBP/USD extended gains for a third day in a row, with the pair rising to the levels marginally below the 1.32 handle on Wednesday. Next resistance now comes in at 1.3220. Further signs of progress could push the pound higher in the near term. The US-Japanese dollar struggled around 111.55 and settled at the 200 DMA, which remains in focus. The bullish bias was due to a widespread risk-on sentiment that weakened the safe haven yen demand, but the upside potential remains limited either as the dollar lacks momentum after disappointing economic reports and ahead of Friday's job numbers. As for commodities, crude oil prices extended gains to the levels just below the $70 handle amid a number of bullish factors. The possible tightening of U.S. sanctions against Iran gave a substantial lift to the market, as well as the ongoing Venezuelan crisis. Investor optimism over a trade deal between the U.S. and China played a role as well. Another important driver is the OPEC deal. OPEC crude production fell for a fourth month in March as Saudi Arabia forged ahead with cutbacks and as power blackouts in Venezuela further squeezed supplies. The cartel's members pumped 295,000 barrels less oil a day in March than in February, restricting total output to 30.385 million barrels. Saudi Arabia cut production for a four-year low of 9.82 million barrels a day. Brent rose to fresh highs but failed to challenge the psychological $70 mark and retreated to the opening levels after the EIA showed that the U.S. commercial crude inventories surged by 7.2 million barrels in the week through March 29th. While economists expected a fall by nearly 500,000 barrels. Gasoline stockpiles fell by 1.8 million barrels, and distillate inventories dropped by 2 million barrels. In general, market reaction to the report was rather muted, and the prices did not lose much ground, which may show bulls' commitment to lifting the barrel further. In the near term, Brent dynamics will depend to a large extent on the U.S.-China headlines as they set the tone for riskier assets in general. Gold prices turned lower on Wednesday after a brief rally a day earlier. The bullion failed to regain the $1,295 level, which is standing on the way to the $1,300 important handle. As long as the precious metal remains below this figure, the downside risks prevail. The price have settled around $1,290 despite dollar weakness as strong risk-on sentiment overweighed amid rising global equities on trade optimism. interestingly, holdings in the world's largest gold-backed exchange-traded fund, the SPDR Gold Trust GLD, fell to their lowest since March 8th at 768.10 tons, which indicates a deterioration in investor sentiment toward the bullion. As for other metals, palladium shed more than 3%, while platinum was up 2.2% to the highest level since March 21st. And so that is all for today. Thank you so much for watching. Please don't forget to click subscribe to always be in touch with the latest market news.